Good day everyone, this is Dr. Sivaraman of iknowindices.com. Hope you are able to hear me. So let me present the second part of now tracking the forex market together part 2 on April 30th between 14 and 14:45 GMT. So I'll be recollecting what has happened during that of the part 1, our live trading decision during 5 and 5:45 GMT, and I will review what are the calls I gave and what happened to those trades. So let me display the slide pertaining to that of the Japanese session or the part 1 tracking the forex market together calls. So in the case of euro, I took a buy position at 1.3245 with an entry stop of 30 pips, and the euro position was making profit, and subsequently I kept stop at entry and removed the hedging order. And when they gained the levels and when euro went up to 1.3335 during that of the European session and subsequently stopped cutting the high, I trailed the stop quickly. I tightened the trailing stop in the profit making position and subsequently booked 80 pips profit. And in the case of GBP, and that was the first position I took, when they made a brief downward stop and to that level of 1.5317 and subsequently gone above that of the initial low of 1.5320, I took a buy position at 1.5325 with a 30 pips entry stop, and subsequently the position was making profit and kept stop at entry and closed the GBP position. When they formed the high 1.5388 and stopped cutting it for more than 30 minutes, I closed it around 1.5375 with 50 pips profit. Then I kept a buy limit order in the case of USD CHF 1.0815. That was the initial low during the Japanese session with 30 pips hedging order, and it got hedged at 1.0785, and subsequently it came down to that level of 1.0759. Then I kept stop at entry in the hedging and closed the hedging when the new low 1.0759 was not breached for more than 30 minutes to 1 hour. Then I closed it around 1.0765 with 20 pips profit and kept a new hedging order at 1.0735, which is not being filled yet, and you can see current low is 1.0749, and the levels can be seen in the live market quote page. I give the live market quote page link here, and you can open it in a browser and see where exactly the current market is. Then it will be easy for you to understand how, using the live market quote page, you will be able to take the positions and also we will be able to trade effectively without any stress. Then in the case of USD Yen 93.92, I kept the buy limit order that was not filled, and also in the case of Australian dollar near the low 0.9272, I kept a buy limit order that was not filled, and in the case of Canadian dollar, I kept a buy limit order 1 pip above that of the morning low 1.0035 and 1.0036. I kept a buy limit order with the 30 pips of hedging order, and the hedging was not filled. The low was 1.0018, and I closed it when they gained the levels during the European session to 1.0059 with a profit of 29 pips. Then subsequently we will again look for another trade during that of the European session. I am not repenting that Canadian dollar has gone up and I could have kept the position, etc. Because these sort of swing trades, we should be able to quickly book profit. If you would have thought similarly in the case of GBP without booking profit, pretty well I would have been stopped out at entry. So obviously we have to think that when the profit is seen, we have to quickly keep trailing stop of 10 to 15 pips or 20 pips depending upon the risk you can tolerate. And when the new high is not been breached for more than 30 minutes, you should decide to exit out of the position. Only then you will be able to retain the profit. In the case of GBP Yen, I took a buy position in the morning during the tracking the forex market together webinar time, 144.10 with an entry stop of 50 pips, and GBPN went up, and also I kept the stop at entry and removed the hedging order and closed it around 145. Then when the new high was formed at 145.18 and not breached afterwards, I booked 90 pips profit. Then in the case of Euro Yen, buy position I took 124.59 with an entry stop of 50 pips. Stop at entry was placed and the hedging order was removed, and then it went up to 125.94 and not breached it afterwards. Then I decided to close it at 125.89 with a profit of 130 pips. Then morning, during the webinar time, I kept SL limit order above that of the initial high. The initial high was 86.47 in the 45 in the case of Euro GBP, and subsequently 10 pips above they filled it, and then they finally raised it also. So it went up to 87.05 and I was hedged, and subsequently the high was 87.07 and not breached afterwards. So I kept stop at entry and that was closed, and subsequently new hedging order has been kept at 87.40, 0.8740, and current high is 0.8723, and after making an initial upward stop and during the start of the session, they have started making the slide in the case of Euro GBP. So this is how the trading decisions can be easily taken. When the market is near that of the high, we can take a sell position. When the market is near that of the low, we can take a buy position. So I will explain now with regard to what sort of trades we can do with regard to the US session. So what happened to the positions I have explained to you? What positions we decided, and what happened to the trades I explained? What happened to the highs and the lows in each of the pair we have watched? So let me just keep the slide with regard to the initial highs and the lows, what we have seen during the Japanese session, so that you'll be able to really understand how this sort of making a note of the initial highs and the lows between 230 and 330. If you make a note, and we will be able to understand where exactly the market is moving or what is the expected market move. Now, in the case of Euro, the initial low was 1.3225, which is not breached, and the high was 1.3265. And still currently, Euro is trading around 1.329799, and it is quite above that of the high. So anybody who has gone short at this level, and they will be still holding the sell position, and they will try to wait for the drop in the case of Euro to cover it. If they would have covered it around 1.33 of 30 or 40 and things like that out of panicness and turn long, then now they are making a dip to 1.339395, and that dip they would have been stopped out. So after the rise buying or after the drop selling are not good trading ideas. Instead, when the market is near the low, we should try to buy. When the market is near the high, when not breached for more than 30 minutes, we can take a sell position. But in the case of these sort of trading ideas, I have also given the expected market moves for today, and I explained that Euro and GBP were expected to make the gains during that of the Japanese session and the early European session. The call is also available in the FX trade block. There you can see, then late European session, they were expected to drop, and subsequently after a brief volatile move, they are to gain again. So we will do buy and sell trade, let them make a little bit of dip, then subsequently we will take the buy. In the case of Euro, GBP 1.5320 was the initial low, and they breached it and formed a new low 1.5317 and subsequently gone above quickly within 5 minutes and sustained there. That is why I took a buy position there. I was able to close it above that of 1.5372. They made an upward stop, and again now they are making a downward stop and to make the gains again. And why they are dropped GBP and not Euro? It is a very simple thing, and probably many people have explained it by themselves of understanding the market nowadays, that to handle Euro GBP, that is to make an upward stop, and in the case of Euro GBP, they are held Euro and dropped GBP, thereby they are able to gain significantly the levels in the case of Euro GBP, and subsequently they will start dumping it. Then in the case of CHF, 1.0815 was the low, 1.0844 was the high, and the high has not been breached, whereas the low has been breached and it has gone below and subsequently formed the new low 1.0759, and a new low has been formed 1.0749, and that has not been breached. Now you find that slowly it is gaining to the level of 1.077477, and they are expected to gain the level. And in the case of USDN, it is making subdued move. It is expected to make a downward move and exhibit overall USD weakening move. And you know the initial high was 94.16, and currently USDN is trading below that. You can understand that they have made the new high 194.57 and subsequently dropped. So anybody who has taken a sell position near that of the low 94.16, they were able to give a profit booking opportunity. So obviously you will find that they are expected to breach the low and go below. Then in the case of Australian dollar, it has been holding at a tight range around 93 area, and subsequently now it is making a brief dip. 92.72 was the initial low. Still it has not been breached. Anybody who has taken the sell positions during this particular week, they will be forced to do the short covering here. And 93.12 was the initial high, and subsequently they formed a new high 93.22, and they are still holding above that of 92.72. So still there is a scope for a go up. Then in the case of Canadian dollar, 1.0035 was the initial low and 1.005 was 59 was the initial high, and they gone below that of the low and formed a new low 1.0018 and subsequently gained. That is why I took a buy position there. I know very well they are not going to drop and probably use the GDP of Canada. They wanted to gain the levels and they have gone above that of 1.0059. Currently Canadian USD CAD is trading around 1.011418 and the high has been formed 1.0136. So this is how if you make a note of the initial high and the lows, you can understand how they are making a downward soften as well as the upward soften on a daily basis. So you know how exactly you can take positions without much of a stress, without much of complications. So now we will take a decisions with regard to the US session. So I will focus the camera over that of the slide of this particular US session. Before going to that of the position taking, I want to explain with regard to the timings of the market. So the Japanese session, European session and US sessions are the 3 sessions of a day in a 24 hours market cycle. In between you come across the gap time 7:30 to 8 GMT is the gap time before the start of the European session. Then 13 to 13 GMT is the gap time before the start of the US session. So you can understand during the gap time, they made the gains in the case of Euro and GBP. Because of that, they have made the initial drop during the start of the US session. A little bit of volatile move during the US session. And to trigger the volatile move and create uncertainty, they quickly dropped the GBP. Thereby, they got the benefit of hitting the stops on the downside in the case of GBP, as well as hitting the stops on the upside in the case of Euro GBP and other GBP cross. Then afterwards, the gap time is 20:30 to 0030 before the next day starts. So gap time moves are false move. When the gap time they gained the levels, so I know that till 14 GMT they are going to drop it because it's the predominant rule they use it during that of the trading time. So the basic trading strategy, let me briefly explain. What's the forex market in all the 6 pairs, 4 majors and 2 commodity pairs, and Euro GBP, USDN and USD CHF are the majors, and the commodity pairs USD CAD and Australian dollar. 30 minutes from the start of the session. So 13:30 the US session starts, then up to 14 GMT you watch it. Now currently it is 14:15 GMT. In the case of Euro, the low has not been breached. In the case of GBP, they cut the low and then formed a new low. And this particular new low, 50 to 55, is not been breached for 30 minutes. You can take a buy position there, understanding that they only made a downward stop before making a rise. And if they continue to cut the low in every 30 minutes, understand you have to wait for 2 hours. Only then we can try to take a buy position. Otherwise, you can also do a technical trade of taking a sell below that of the low and quickly book 30-40 pips profit also. So take a sell position if a pair is near high and not cut the high during the 30 minutes of watching, or take buy position if a pair is near low and not cut the low during the 30 minutes of watch. So near the high we can take a sell position, and in the 30 minutes if they are not breached or near the low we can take the buy position. So that way we can decide with regard to the trading. Then keep 30 pips of stop if the hedging facility is not available, or the hedging order entry stop, which is also known as in the trading platform. You can keep it just to limit the risk to only 30 pips. And then once the position makes profit of 20-30 pips, you can keep stop at entry and remove the hedging order. You would have noticed that how exactly I had done it with regard to the positions taken during that of the Japanese session. Then after keeping stop at entry, we can trail the stop, and thereby we are able to eliminate the risk, and subsequently we can trail the stop maintaining 15 pips from that of the market or 20 pips from that of the market, depending upon the equity you have or how tightly you wanted to keep the stop. Then keep 30, 45 or 75 pips limit, and this limit you can just move away from that of the market to maximize the profit, but the trailing stop you should not take away from that of the market. And you should, when the market rises, the trailing stop should go up. When the market comes down, let it get filled. If it is filled, you think of a new position rather than trying to hold the position as a very precious position. If it had held the GBP position as a very precious position, you know that it would have made a loss now, or I would have been stopped out at entry. So no sentimental attachment with any currency pair. They are all tradable, and try to see that you are able to effectively trade this. Now with regard to the hedging, I wanted to explain, and I already explained during the Japanese session, and the advantages of hedging. Hedging is used instead of a stop. So entry stop, if you use, both your buy position as well as the sell position will get filled, and you will be seeing them in the platform. And in case if you are using stop, the stop will close your initial position, thereby you will not hold any position. If you don't hold any position, you can't think of any profit. And only if you hold the position, then there is a possibility of trading the position separately. Like if somebody is holding a buy position, how exactly he is going to book profit on the buy side, and how exactly if somebody is holding a sell position is able to think of booking profit on the sell side. So you will be able to keep both the positions and think separately and book profit as well. Then hedging is used to continue trade when the market moves in our favor. So as I explained that when USD CHF has made the initial drop below that of the low and my hedging was making profit, I kept stop at the entry in the hedging to see what is the new low they are forming before taking a decision. So they have been dropping it. Then afterwards, when the new low was formed and that is not being breached, then I started booking profit. So it gives a cooling time for us to take a decision by keeping simply the stop at the entry. They even quickly they reverse it. Our stop will be closed. The hedging will be closed with a stop at entry, and we can continue to trade with the original position. Then hedging can be used to do either way trading. As I explained, in the case of USD CHF, I was hedged, and subsequently it made a drop and a new low has not been breached. Then near that of the new low, I booked some profit in the case of the hedging and kept new hedging order. As they raise it, I will trail it again to that of the initial hedged level 1.0785. Once they go above that, now currently it's trading around 1.078083. I will watch and subsequently keep the hedging order near that, so that I booked some profit and again brought the hedging to the original level. Once the position, initial buy position makes profit, I'll keep stop at entry and remove the hedging order. So I use the hedging to limit the risk, and also I use the hedging for either way trading. The hedging can be used to reverse the trade when the other way going is good. So in case, for example, the same CHF, USD CHF position, let me take, and then once we are hedged and the hedging is making profit for more than 2 hours, immediately I decide, okay, they are going to drop CHF further down and they are cutting the new low. Then I will quickly exit out of the long position and try to maximize the profit with that of the short position. So that sort of reversing is possible once you use the hedging And suppose if I book a loss of say 60 pips in the case of the buy position, already that sell position is making 30 pips profit. And if the market moves down another 30 pips, then I will be at break even. Then subsequently if they drop further down, and that will be my net profit for the day. So in the same day also we'll be able to close the position instead of doing any position trade also. The hedging is used to hold the position and continue trading when time offers. In the event of emergency, we can hedge and leave the trade. So suppose I have taken a buy position in the case of euro, and later on I will not grumble. Oh God, suddenly there is an emergency. I need to leave the trading platform and leave and attend to the family. So there is no regret for me because I'm not taking any undue risk by keeping the open position. I will straight away keep the hedging order or hedge to the market and just go and attend to that position. Emergency work and come back and continue trading. How exactly I can continue trading? The next day or the day after or any time of that nature, I can come back and continue the trading. How? When the market has moved with regard to the initial thinking that it has gone up, then the hedging will be making a loss. If it is not hedged, then it is fine. If it is hedged, the hedging will be making a loss. Say, for example, 70 pips loss it is making, whereas my buy side position is making about 40 pips profit. Still, my loss is only 30 pips. If I feel like I can simply close both the positions, there is an option available in the trading platform where you can close it with it of the hedging. So I will only incur a loss of 30 pips, which is predetermined. So I am not regretting. In the event if I want to continue trading, then I close my sell side hedging with 70 pips loss and the 40 pips profit is seen in the buy position. When the market moves another 30 pips in my favor, then I am at break even. Then when it moves further up, I am able to book profit at that. So it's a question of decision making, and your decision making should be very, very important, and there should be a tendency to accept a minimal loss rather than allow the loss to multiply later on, cry and make huge comments and things like that, which is of no use because nobody will be able to help as far as your trading is concerned other than yourself. So your decisions are final as far as your trading is concerned. So you should be in a position to trade effectively, applying your mind that you have to take care of your trade. Nobody else will be able to help you with regard to that. Then hedging can be used to close the position at any time frame instead of stopping out the position during uncertainty. So after taking a position, market has moved far away from there and it is making about 200, 300 pips loss and things like that. I do not want to continue with the trade. I simply close it with the hedging, accepting 30 pips loss and think about the fresh trade. And which also gives me an idea that market is in a downtrend. So let me take do a sell and buy trade and earn the 30 pips back or more and continue trading. The hedging can be used to spread the risk with a limited risk in each position trading. So some people have got the tendency to do the position trading that they try to average the positions every 100 pips. So that is a very good trading strategy. It's about equity, about $20,000-$30,000. Take one mini lot and take one mini lot near the low and every 150 pips below you keep another buy mini lot. And when the market moves about 600-700 pips also doesn't matter, then you will be holding only 5-6 positions and subsequently when the market goes up, every position you book 150 pips profit, you will find during the market cycle all the positions will be making profit. So in that process also you can use hedging every 30 pips and allow the hedging to remain there and see that when the market is coming down and you find that it has gone to the extreme level during the month end and subsequently you close all the hedges with a profit on the downside and keep tightly about 6-7 hedging orders for all the 6-7 positions. Then subsequently when the market moves up, you just maintain the hedging order to limit the risk and simply close the positions as they are making profit the buy position. That way a person can do position trade using the mini lots but taking very less risk in the market and maximize the profit. That is one of the trading strategy I teach in the professional trading training also. Then hedging can be used for breakout trades. Even you don't require a position, Suppose you find euro is having a high of 1.3342, you keep a hedging order 1.3350 and a buy limit or buy hedging order. Because if you want to keep a buy limit order, you can only keep below that of the market. And if you want to if you want to do a breakout trade, you will be able to keep a buy order above that of the market, and that will take the position. And subsequently, when the market goes up, you will be able to book profit after keeping stop at entry. Then hedging can be used without additional margin in many platforms. So wherever the hedging facility is available, other than the US platform, you come across the hedging facilities where they don't take additional margin when you are using hedging. So $500 is normally taken as a margin for in 200 is to 1 ratio. Then you block about $500 and take one standard lot position. And if you hedge it, they don't take another $500. Whereas if you use two different accounts for hedging, obviously each account will take $500 as a margin. So that is also another advantage of the hedging. And besides, hedging in the same pair will be the best. In case if you want to use the hedging with an alternative pair, for example, suppose you have got a buy position in the case of euro, and you wanted to hedge it. Suppose you have got a buy position in the case of GBP and you wanted to hedge it with euro, for example. GBP has dropped, the buy position will be making the loss, and whereas you are taken immediately a sell position as a hedging, and the sell position will also be making a loss. So when they are making such contrarian moves, you will not come across this sort of hedging with other pairs will work out effectively. Even with regard to euro CHF, if you see hedging, that is a buy position in the euro and also a buy position in the case of USD CHF, then you find that USD CHF might sometimes move in tandem with that of euro, or it can just move against also. So similarly, as an example, you may find that euro might be gaining slowly and USD CHF will also be gaining slowly in order to gain euro CHF cross. Or sometimes you might find that euro is gaining first in case you are at a short position and USD CHF may not be dropping correspondingly. Then you will get struck. The hedging may not be useful really. So let us think of, I will go to that of the forecast for this particular session. Already it has been displayed in the blog, and for the benefit of those who have come to the webinar, I am just giving the forecast. In your session, euro and GBP are expected to make volatile moves and spike up for the weekend close. So what sort of trade we can do now? So in the case of euro, currently you find that 1.3315 is the current level, and it is quite far away from that of the low. So it made a dip. That was a very good time to take a buy position. Anyhow, I was explaining at that time with regard to the trading strategy. So it doesn't matter. Now we will take a buy position 1.3317 with an entry stop of 30 pips. So I'm not worried about the level. I am worried about only the trend within the session. So I will not be focusing only to buy when euro comes down to 1.31. I will only see where exactly the market is in a given condition, and when the trend is up, the forecast also says that there is expected to be a spike, and also that in the case of euro, they are not cut the low and they are still holding high and they are expected to make the gain. And so obviously anybody who has gone long, they would have booked the profit, whereas anybody who has gone short at the lower level, they would not have just cover it. And there is a bearish feel in the market. So people will be thinking that let euro come down, then let me close my sell position. Obviously, how much euro can gain? That sort of attitude they might be having, or sometimes they will think that, okay, if there is further gain, let me average myself and subsequently book profit. So it is a question of herd mentality, and depending upon the trader psychology, the players make the moves. So I am taking a buy position as an intra-session swing trade. Then in the case of GBP, You find 1.5282 is the current level, 1.828, 1.5282, 1.5286 are the levels, 1.5255 is the low. The low has not been breached for more than 30 minutes. They made the cut below that of 1.5317, that was the initial low, and subsequently formed a new low, and they are not cutting the new low every 30 minutes. Now it is 14:30 GMT. They are not cut the low. So I'll take a buy position 1.5282 with an entry stop of 34. Then in the case of CHF, I'm already holding a buy position 1.0815 with an entry stop at 1.0740, which has not been filled. So as they gain the levels, I'll try to keep stop at entry in the case of USD CHF and try to book profit. As I explained that USD Yen is expected to drop, I'll take a sell position because it is holding below that of the initial low set in the morning. So it is 94.08. I'm taking a sell position with an entry stop of 36. So I'm not expecting a contrarian move. As you see in that of the live market code page, you come across Euro is showing net change positive and GBP is showing a net change of 33 pips negative and USDN is showing a net change of 8 pips positive. So you find they are not intend to make a contrarian move for the weekend and they are expected to drop USDN as per the forecast, as per that of the market reading. Then Australian dollar 0.9298 is the current level and they are not breached in 1 hour from the start of the session. So I will try to take 0.92, 0.9301. I'll take a buy position. With an entry stop of 30 pips. Then USD CAD, it has gone above that of the initial high and 1.0059 and subsequently it is holding around that of the psychological level 1.0106, 1.0110 at the current level and 1.0136 is the high and the high has not been breached for 30 minutes of watching. So I will not decide to take a position. So I will see how exactly they are handling the current, the psychological level 1.01 and they will try to make a brief downward stop. At that time, we can try to take a sell position or a buy position, depending upon the market moves. When they go closer to the high and not cut the high in that, then we can take a buy sell position. Or if they break the high and stay above that of the high for more than 30 minutes, I can take a technical trade of buy above that of the high and try to book further profit when they rise further. So this is how we should be able to trade the decisions based on the initial lows and the highs. Then you will find the trading decisions become very, very easy, especially with regard to the swing trades. And don't be the victim of greed or the panicness. And when the position makes profit, try to keep stop at entry and remove the hedging order and try to trail the stop to protect the profit and then keep the limit, and the limit can be moved away from that market. The limit can be 30 pips or 45 pips or 75 pips depending upon the time you can spend in the market, and try to close the position as quickly as possible within the session. Then with regard to the crosses and Euro GBP, I am holding already a sell position 0.8655 with an entry stop at 0.8740, which is intact and the hedging is not being filled. The high is 0.8723. I'll continue watch. Once the position makes profit, in the case of crosses, you have to keep 50 pips hedging order, and if it is filled, then we have to watch and close it and keep 30 pips from there onwards, the hedging order to limit the risk. And once the position makes profit, I can keep stop at entry. And if my equity permits, I can take after hedging it. If the hedging is the earlier hedging level 0.8705, that is the initial hedging level that got filled. And see, imagine that I taken a buy position at 0.8705 and waited, and it went up only to that 87.23, and again it has come back to my level, the buy level, and it is stopping out. Then I will try to take a sell position there and close both the sell positions below their average and quickly exit out of the position. So this is how you will be able to decide upon the trading strategy. And whenever you are taking additional position, see that there is a very good spread between the earlier position and the new position, and don't take sell positions in quick successions of 20-30 pips, and try to spread the risk. So suppose 0.8655 I taken a sell, then at least 100 pips above try to take another sell, so that the average will be moving above to that above the level of 0.87. Then it is easy for me to close both the sell positions below their average. If you try to take every 30 pips one position, then every day they can rise the market about 100-150 pips and drop the next day and things like that. And if they rise, then you would have added already 5 positions. All the 5 positions will be making loss, and your usable margin will erode drastically, and that triggers the fear. So why to become unnecessarily panic with regard to the market? And you try to spread the risk, and the market cannot go to infinity on the upside or to that of zero on the downside. It will be making up and down move using various types of attributes. So we have to understand that the players are trying to do as much as possible to earn their money from that of the traders. So you have to trade along with that of the players, spread the risk in a wider range, because you don't have that much equity to continue taking positions. So avoid over trading and try to take an exposure only for about 5-10% of your usable margin. If you have the hedging facility, if you do not have the hedging facility, try to expose only 1 or 2% of your usable margin in taking positions. You will not get a margin call, and if you wait for 2-3 days, definitely you will be able to make profit either on a sell side or on the buy side. So keep that as a thumb rule. Then you will not have any fear. You need not even do any sort of homework or market analysis and things like that. And trading is very simple. It is a child's play, provided you understand how to do that. So let me minimize PowerPoint presentation. These are all the positions. Later on, we will see how exactly the positions are making profit before concluding the webinar. I will meanwhile focus the camera over that of the live market quote page. Okay. Need to put a profit in blue, loss in red. Okay, fine. Doesn't matter. So just to make the display visible, I just chosen the color, not with any other intention. How can I get these initial lows and the highs? See, the initial lows and the highs you can watch in the live market quote page between 2:30 and 3:30 GMT during the Japanese session. That is end of the early Japanese session. So you can see whatever the high and the low shown in the live market quote page, and they are all set with regard to the GMT time. You can refer to the GMT time. You need not convert into local time. The link what I have given, and you can just make a note on a daily basis, the initial high and the low, and you will find that how exactly during the US session they are taking the market either on the upside or on the downside on a daily basis. The initial lows and the highs will clearly indicate the direction of the market for the intraday trading, and you can easily take trading decisions. In the AVA, you mean 30 minutes before the session? No. 30 minutes before the session will be the gap time between 13 and 13:30 GMT. What I referred is 30 minutes from the start of the session. That is, from the start, the session, US session starts by 13:30 GMT up to 14 GMT. You watch when they are near the high, not breach the high, take a sell position. And if they are near the low and not breach the low, then you try to take a buy position. and also follow the forecast. I am giving it in the blog, then accordingly take trading decisions. In the blog, suppose if I give it that there is an expectation of gaining, then you have the market reading that they come up to that high and afterwards not reach the high, then you try to close your buy position. Simple. So that is how you can take trading decisions, because the forecast is derived based on various other independent parameters. So obviously you have to see in the live market condition what are the factors which are going to trigger the market either on the upside or on the downside. And sometimes the volume is less, then the market might make subdued moves. So you have to understand all those things. They are between the cup and the lip. So anything can happen, even though we derive the forecast, anything can happen in the actual market. So be prepared using your trading strategy. Now slowly if you watch that they are dipping little bit of euro and gaining the levels in the case of GBP, as I explained in the blog that they wanted to gain the levels in the case of GBP and later on gain the levels in the case of euro. Thereby, Euro GBP, they will be able to drop it. After making an initial upward sharpen, they are slowly dropping up in Euro GBP because they have abundant positions in the case of Euro GBP. They are liquidating it. Then, do you think GBP will reach today's high? GBP is expected to reach today's high. If you see the net change is only 22 pips negative. It is not a sign of bearishness and it is only a stop and they have done it and subsequently they wanted to gain. And in case if they do about 100 pips net change or 75 pips and above net change, then you can understand the reversal becomes difficult. Otherwise, they can easily gain the levels after the stop runs, either on the upside or on the downside. Then Prince, are you saying that Euro will likely to test 1.345? Yes. Very soon you will see that during the early May. Today is the last day for this particular month. They are gaining the levels slowly and afterwards they will quickly gain the levels and offload all the buy positions. You know, in the case of Euro from 1.31 they have been accumulating and they are buying it slowly and creating the uncertainty to the traders. So everybody is booking quickly and minimal profit of 20-30 pips if they have got a buy position. And those who have got the sell positions, they think that okay, anyhow market is going to come down because many of the technical analysts are telling that 1.27 or 1.25 could be seen in the case of Euro. Why we should close it in a hurry? Then quickly from next week, they will gain the levels and induce them to do the short covering and they will also turn long later on, they will drop. So it is a question of only trapping the traders on the upside and the downside and no other magic is involved in the market. Because that is how the players can earn money from the market and the small traders become the victim. That is why many of the statistics say that 95% of the traders are losing money in the market because what we see in the market, we believe. We have to understand the hidden agenda of the players and trade accordingly. And they drop the market quickly and buy. They quickly gain the levels in the market and book profit. But during the drop, we become bearish and sell. During the rise, we become bullish and buy like fools from them. Will Euro go to 1.40 in next 2-3 months? There is a potential for Euro to go at a higher level and probably they have to breach the level of 1.36 to start with. And afterwards, gaining the levels will be very, very quick. Because you have to understand that the market volume is very limited and the players are trying to earn out of that, making use of the best opportunities available in the market. So we have to give time for them to make necessary moves to attract new traders and then make big moves in the market. And market volume has come down drastically, which shows very clearly that even during that of the data release time, the market is not making any sort of volatile moves, besides keeping subdued for predominant of the time of the day. So you can easily understand this sort of consolidation without much of a move. When you watch the live market quote page, the quotes become black. You see how many currency pairs the quotes have become black. So that means The players are also not interested in making any sort of new codes and making swings in the market. Then USD CAD will go to 1.10 area in next 2 months. There is a great potential because they are done below that of the parity and subsequently they are expected to gain the levels. What do you think about stock market? Stock market is expected to gain levels in the month of May, but from June onwards you will come across again the drop in Dow Jones and other stock markets world over. Then you will be able to understand, and especially current commodity markets are also expected to drop during the month of May. That is why we come across in the case of gold, crude, silver, etc. the high level consolidation and pump and dump moves are seen, as they are done in the case of currencies. Around 1.48 level in the case of euro, they have done the pump and dump. And in the case of GBP, around 1.75 level, they have done the pump and dump move. Similar to that, now they are doing pump and dump move in the case of gold and stocks. Don't become bullish with regard to that sort of moves. But you have to be very, very careful. They will discourage short sellers. And whenever they are making up upward stop and try to take a sell position, then you will be able to book profit. Then with regard to discipline, USDN is near the low. Won't it be better to sell on retracement back up? Yes, obviously it is a better idea to do that near that of the high to take a sell position. But I have to take positions during the webinar time, not at my convenience say that these are all my positions. That doesn't show any greatness. That is why I wanted to prove before you that we can take positions live and still earn money from that market, provided we understand the trend within the session. And you can take the positions in a demo trading account and see how exactly it performs and try to do on a daily basis using a hedging order and keeping stop at entry. Make it as a habit for you. Then once you become habituated with regard to this style of trading, and if it is suitable for you, you can do it. Then Eric, what about the N crosses? Will they spike up as well or it is dragged down? As far as the N crosses are concerned, as I explained that USDN is expected to make a downward move and Euro and GBP are expected to make an upward move. As a result, they will have very less impact. And because it is being weakened and the players will initially concentrate on the European crosses and subsequently N crosses, they already handled it, gained the levels and dumped their position. And they will simply keep it subdued. And they will try to focus on the majors and try to make some money out of that during this year session. That is why you come across very volatile moves in the case of US session on a Friday. Word or two about the yearly forecast. It is your old forecast shifted for 2 months. Now I will come back in the month of May or June and talk about the yearly forecast because I don't have much time here to drag and talk about yearly forecast, and I'll spend exclusively one session to recap what the forecast I have given during the start of the year and where exactly the market is and what could be the possible reason and what could be the expected forecast for the rest of the year. I'll do it. If capital allows it, can we take a second position of 2 times the first one in the same direction of 60 pips off our first entry and then hedge 30 pips from the average? You can do it, Francisco, and it should not lead to any over trading. That is very, very important. You have to control your over trading urge, then you can do it with the capital permit. And with very less capital, then only take many lots, then you should be able to spread the risk. So instead of taking 3 mini lots at one time, you take only 1 mini lot and see how the going is. The going is good, add 2 more mini lots even at a lower level. If you are doing a sell and buy trade, doesn't matter. And if they gain the levels against you, if the market moves, then spread the risk by taking additional mini lots at a higher level. I think that sort of trading strategy will really help and it will avoid over trading rather than committing 3 lots or 5 lots at one go. Because the levels are not precious and the players will keep visiting the levels. And today is a classical example that in the case of GBP, they gained the levels from 1.53 and straight to 1.5388 and came down and gone below that of the low, and again they are gaining it. So this sort of moves are bound to happen in the market. So no level is precious. If you book profit, that is precious. You can, what corresponding to that of the corresponding position, you can keep the hedging order. So if there are 3 lots at the end of the day, then you have to keep 3 hedging orders for all the 3 positions. Then what high-low range in cable do we see in the month of May? The cable is expected to go to 1.57 area. The low could be 1.51. They could make a quick downward stop in next month and then rise. You know that last week of the month and the first week of the month, you will come across more volatile moves during trend reversal time. So during that time, they may revisit 1.51, but don't wait for that in order to book profit in a low sell position, and use your trading strategy accordingly to it. Then, do you see GBP breaking high today? Yeah, there is a great potential for GBP to finally gain the levels today. And it might look subdued because they are handling little bit of the crosses. And once the positions are taken by the traders, they will try to act against the traders. It is, yeah, GBP is holding above that of the initial low. 1.5317 was the initial low, and subsequently they are dropped, and now it has gone up. At the same time, you have to understand that 1.5255 they are not breached for more than 30 minutes. Okay, that is how we have to see how they are going to make the intraday trend or intra-session trend in a given day. So no more questions. Then let me focus the camera over that of the positions here. So I have taken a buy position in the case of euro, which is making a slight loss. Still, it has not been edged. And in the case of GBP, it's making a slight profit. As I anticipated, GBP is gaining a little more when compared to that of euro. They are holding euro and they are slowly gaining the levels in the case of GBP. Now you find euro GBP is making a dip. Then in the case of CHF also, they are holding the levels and they are not breached the low. And once they go above, and I can trail the hedging order and try to book profit on the upside also. So on the downside, I have booked profit in the case of USD CHF, and also the upside, I am going to book the profit. This is on a either trading basis, you can book profit by using hedging. That is a real advantage of using hedging. And in the case of this is the position, I am carrying it from that of the Japanese position. Then the sell position, I have taken it around 94.08, and currently the level is 94.02, 94.05. It's making a nominal profit. And once it goes below 94, then I'll try to keep stop at entry in the case of USDN. Then in the case of Australian dollar, I have taken a buy position, which is making a slight loss. And I got a hedging order to limit the risk. And once they go above, then I'll try to keep stop at entry. And similarly, in the case of Euro GBP, and the hedging has not been filled, the new high of 0.8723 is not been breached for more than 30 minutes. And they are going to definitely drop Euro GBP, and then I'll be able to book profit in this. This sort of decision making is very, very important in trading. Okay? So I take this opportunity. Thank everybody who have come here to listen to my talk, the part 1 as well as part 2. And again next month, I'll give around 28th of May, the Tracking the Forex Market Together webinar. Then if they have any more questions, you can post it in the blog. I'll be glad to answer to those questions. Try to ask questions which is really knowledge based, rather than simply asking can euro go up or can euro GBP come down and things like that. Because when you ask every 10-15 minutes, it's impossible for me to answer to those questions. By the time I answer that, the market would have a different scenario. So that answer may not be relevant to that of the question. Instead, ask questions in order to learn how to trade. Then I am glad to answer to those questions. And if there is any deviation from that of the update or the blog I have given it, I will voluntarily post the new post or voluntarily give the remark in the blog that what is the expected move in this particular session. So try to control your emotions and try to be calm while doing trading. and avoid over trading. Take very less positions depending upon the equity and try to accept losses during trading. These are all very, very essential conditions in order to become a professional trader. So I take this opportunity to thank FX Street and all the participants here and meet again on Monday during the Asian session live market analysis. Thank you one and all.